Hey, it's Mark here from ETF Tracker and welcome to the ETF Tracker show. In today's episode, we're doing an interview with one of the experts. In this case, it's Peter Harper from BetaShares. He is the co-head of distribution and head of capital markets, and BetaShares is one of the biggest providers of ETFs here in Australia. They've got over 60 ETFs and they've got one of the biggest funds under management books of all of the Australian providers here. So definitely make sure to check out this show. We'll talk about some of the BetaShares ETFs, a couple of megatrends, and a little bit about the history of Peter getting into the ETF market. So it's a good one, so make sure to check it out. All right, I'm here with Peter Harper from BetaShares. Peter, thanks for being here.
Thanks for having me, Mark. It's great to be here. Really excited.
Yeah, thank you very much. It's an exciting series of conversations with different people from the market. So I'm really keen to get your perspective on things. And why don't we just get straight to some of the questions?
Sure thing.
All right. So the first one that I ask everyone is just a bit of background to get some context there. How did you move into the ETF industry? When was that? And what was it that attracted you to ETFs to begin with?
Yeah, well, it sort of was around the end of 2010. I was involved in institutional equity broking. We'd been through the GFC and we'd seen the recovery since March 2009 and were some way into that. At that point, I started hearing more about ETFs, and then out of the blue was tapped on the shoulder by a newly founded firm in BetaShares and to gauge my interest in the role. And at the time, I sort of thought these ETFs, we don't try and match the market, we try and beat the market, And so my initial thought was skepticism, but then I did a lot of research into it. And the more you think about it, we were there trying to pick whether you should be in NAB or CBA or BHP or Rio. And so often the professionals couldn't get it right. And I did more research on ETFs and just the diversification and ability to not have to pick one stock or another, but to be able to own them all and own an entire thematic became really interesting to me. And I researched what was happening in ETFs and their growth offshore. And then when you bring it down to the basics, at the end of the day, the ETF is just a structure, and the structure was a managed fund, but it could trade on the exchange. And I thought, hang on a second. You could have ETFs not just over Australian shares and the Australian index, but international shares, sectors, currencies, commodities, thematics, and the idea of being able to have that diversification in one trade in so many different areas on the ASX, I thought this is actually pretty cool. I was lucky enough to get the job, I suppose, back in the day.
No, that's brilliant. And it speaks to a lot of the benefits and advantages that people see in ETFs. The first part that I ever saw about the market, the first exposure was single stocks. And it's so hard to just do that. And now a lot of people are seeing more around ETFs thanks to the work you guys and many others are doing. So that's really good. What kind of clients at BetaShares, what kind of clients do you provide services to over there? And can you give some examples of how investors might use BetaShares ETFs and to build portfolios?
The truth is, Mark, I mean, it's pretty much every type of investor out there, but I'll give a few examples of how different ones might use ETFs. And one of the things we talk about a lot with ETFs is the democratization of investing. So ETFs have been that vehicle that's taken an institutional grade investment capacity and put it in the hands of a retail investor at low cost. So we definitely still have institutional clients, large asset owners or superannuation funds, or even other fund managers who'll own ETFs either as a strategic core holding or sometimes for tactical purposes. But the real early adopters of ETFs in Australia were the retail investor. And initially that was through self-managed super funds. Mums and dads managing their own retirement savings, wanting a way to diversify and simplify and lower the cost of their portfolio. So SMSFs were definitely the early adopters, very closely followed by advisors who were using ETFs to build high quality and low cost portfolios for their underlying client base. But the real change, I suppose, which has kicked off since COVID, has been the rise of the direct retail investor. And when I say that, I refer, in many instances to people making their first investment ever. And we've seen that all around the world. And, with things like, high house prices in Australia, home ownership is not viable for many people, but they still have an aspiration to grow their wealth and save money, maybe for that house if ever they do get there in the future. And so that's been the fastest growth part of the market of recent times. And it's just great to be able to deliver, a really robust solution to so many different parts of the market.
Yeah, that's really a poignant kind of thing, because there were just recent articles, and we, you and I, because we've been in the space for a little bit, but I'm sure you've definitely seen people, looking at ways to kind of grow their wealth, and with interest rates as low as they are, and property kind of being out of reach, like where else are they supposed to put it? Do they potentially gamble a little bit and try to pick stocks? It's a really difficult game. It's a full-time job. So, it's good that you guys offer that kind of stuff.
Yeah, well, they talk now about rent vesting, people who'll be renting for their entire life, and will have to build their wealth not through home ownership, but through their investment portfolio. And, luckily, ETFs with their versatility can be used for, low-cost core holdings and long-term investing, but, it can also be traded in the shorter term, if that's the mindset that the investor has or the view that they have.
Yeah, there's liquidity there. That's really good. The next question was, just kind of talking to that, someone that has been part of the ETF industry before it became really big. What were those early days in Australia kind of like? And did you expect the ETF industry to get as popular as it has been? And, do you, so kind of like before, the present, and then do you see growth for the future as well?
Yeah, it's a really good one, because I do remember those early days. I think they're forever etched, or maybe a better word is scarred into my memory.
Yeah.
I'll be honest, it was a tough slog in those early days. You'd go around and try and tell people about the ETF story, and there wasn't a great deal of interest. And I sort of equated a little bit sometimes maybe to, Apple used to have the iPod before iPhones and so on. And that was a great product. It was better than carting a CD player around in your pocket, but it never, really hit the heights, because it was sort of new and innovative, but people never quite invested the time to understand it and get to know it. And it wasn't really until that became embedded in your phone that people all of a sudden, you saw the mass adoption effect, I suppose. And ETFs were a little bit the same. I mean, I always had an underlying view that if you're there delivering a democratized investment solution, that's providing better diversification, lower costs, great transparency, solid liquidity. I always believed in my heart that they were going to come good, and that they would reach that tipping point. But it took a number of years for that to come to fruition. I mean, to give you just a little anecdotal example, I mean, I think it took somewhere in the range of around 3 years and 3 months for BetaShares to raise its first $1 billion of assets, which is quite a time frame. Now you might see that sort of level of inflows, in 5 or 6 weeks, sort of thing. So the market itself's come a very long way. I think there's no doubt that ETFs are now mainstream.
Mm-hmm.
The benefits that they offer have just won investors over comprehensively. And so for that reason, I think we're just at the tip of the iceberg in terms of future growth potential. I mean, a really interesting market to watch is actually Canada. They've got a very similar population to Australia, very similar market and market environment. And if you look at the history of their market, we've tended to track that quite closely, but a few years behind, maybe 5 or so years behind. And the Canadian market is now sitting at around $340 billion of ETF assets in Aussie dollar terms, versus our market at just over 100 billion. So I think that certainly indicates that there's very, very strong growth potential in the ETF industry well into the future.
That's brilliant. And I mean, there's very interesting things coming out of Canada, like when we look at the history of ETFs, they very, early adopters there, as well as like with Bitcoin ETFs, which are those new kind of popular things that people seem to be talking about a lot over there, Bitcoin futures ETFs, and now the rage, and whether or not we'll get something here. And I know that you guys are looking into that kind of stuff too. So hopefully we see some of these innovations just come further, and it's going to keep us, in the business of talking about ETFs. So I definitely have a vested interest in making sure that, ETFs continue to be quite popular. So I'm keen to see those predictions kind of come to fruition. I'd love to see the market double here.
Mate, I've got no doubt that we'll have plenty to talk about well into the future.
Yeah, absolutely. So BetaShares provides a range of ETFs, of different ETFs to investors across various asset classes, and you've got a mix between active and passive there. How do you think about that active versus passive debate?
Look, I mean, I think what I'll start saying is that we think that there's a place for both active and passive in portfolios, and we're unequivocal about that. We are not passive evangelists. I mean, to put the shoe on the other foot, so to speak, if you could reliably pick an active manager who is going to outperform the market on a consistent and ongoing basis, you'd be an idiot not to invest with them, right?
Yeah.
So, there has to be a place for active out there in the portfolio, in our view. And we support that by offering a number of active strategies where they've demonstrated consistent track records of outperformance. I think the challenge for investors comes back to the fact that the data is pretty damning of active management in general. If you look at the long term, around 75% of active managers underperform their benchmark net of fees, and they're charging you a lot to do it. Mm-hmm. So, if you're going to follow the numbers, and if you want the odds in your favor, certainly the historical data suggests that, you're going to get better performance in most instances and lower costs from going a passive route. But I sort of think about it in terms of, you probably want to consider, controlling the controllables, in this case, better probability of performance and lower cost in the core of your portfolio. But there are going to be areas where active management might provide, a particular advantage. Take maybe small cap managers or potentially emerging markets. These are hybrids. These are some areas where active management has tended to add value in more opaque market environments, and that's where, from my personal perspective, I think about implementing or the appropriateness of implementing an active strategy.
No, that's really good. And I've definitely heard a lot more speak about that it's not one or the other. It's really contextual in terms of what you're looking to do. And there are, there are ways in which you can take advantage of the benefits of both. But yeah, definitely. It's a really good and interesting debate, but it often comes up in conversation, whether it's retail investors or just other people that might be looking at the ETF market. So it's good to get your thoughts on that. Really appreciate it. The next one is back to BetaShares. You guys have quite a large number of ETFs that you provide to investors, about 60 plus from last count. And I'm sure there's always more. There was a period of time where I saw almost each month there was like a new BetaShares one, Earth and CLDD. And so these are great innovations kind of coming to market. And how do you guys differentiate yourselves between what you offer and other providers? That's a question that comes up, like, what should I look at, these ETFs or another? But how do you guys think about that between yourselves and other providers?
Look, the first thing I'll say is I think Aussie investors are very lucky to have a large number of high quality ETF issuers to choose from in Australia. Whether it's us or our competitors, I think we're blessed for choice with high quality ETF issuers in Australia. But if you were to ask me how we differentiate ourselves, I think it comes back to a few key areas. The first is that at the end of the day, we built our name delivering solutions that were built for Aussie investors. We're an Australian-owned and managed business, and therefore our focus is on delivering for Australian investors. So from day dot, we pioneered structures like the domestically domiciled international ETF, which meant that investors didn't have to fill out W8 Ben forms or worry about US estate tax implications. Why did we do that? Because front of mind for us always was our Aussie client base, because we're an Aussie business, right? Some of our competitors, were basically taking their US product suites and trying to flog them into Australian investors, and without thinking about some of those potential consequences that might have. So our Aussie focus is our number one differentiation. I think the other thing we've always been known for is the fact that we're very innovative, not just in changing product structures like I just identified, but we've done things like offering the lowest cost Aussie equity exposure in the market with A200 at 7 bips. That was pretty innovative, and at the time, cut the fees by half on other equivalent exposures in the market. I think we've certainly looked at other areas like some of the Asian technology or thematic investing, and been right at the forefront of those too. And I think areas like ESG and ethical investing we've been at the forefront of. And so we've built a real name for innovation, nimbleness, and the like there. And I think finally, just the breadth of our product suite at the end of the day. We've got over 64 ETFs out there now. It's the biggest suite in Australia. So whatever you want, you can come to BetaShares and find high quality product in that space. If you want low cost passive, we've got it. If you want to go to smart beta, where you're still paying a low index cost, perhaps slightly more than market cap weighting, but with the ability to tilt towards value or quality or other factors, we've got it. If you want to go all the way through to active ETFs, we've got that too. And so that ability to be the one-stop shop solution provider, really plays to that differentiation also.
That's brilliant. There's a lot of value that you guys offer to market, and you mentioned just the ESG type ETFs. That's something that's close to my heart as I look into, and you've definitely got quite a few interesting ETFs there. The biggest one in Australia with ETFs at the moment in terms of funds under management. So it's good to see this kind of stuff. And just on that point, speaking of these new kinds of ETFs that are coming to market, what's that process like? How do you guys think about, or where did the ideas come from to create new ETFs? I think that'd be interesting. Like, do you see what kind of trends are going on in the market? Are you guys constantly looking out for this? Is there like a dedicated team? Could you tell anything about that process to the viewers?
Yeah, sure. And look, I mean, it's what you'd expect. When you're developing an ETF, you're trying to look at where there is either current or potential future demand, and to plug those gaps. And that's sort of the genesis of your thought. So if you think about where you might identify, or how you might identify demand, don't underestimate the number one spot we look to, which is feedback from our investor base. We have direct retail investors emailing us ETF ideas and areas of interest on a regular or daily basis. Right? We speak to advisors out there in the market who are saying, "Hey guys, it'd be great if we could access X, Y, Z thematic." We speak to institutions who demonstrate those same sorts of interests to us. So you have, as an investor, have a real capability to influence what goes into the market by demonstrating that demand to an issuer. And it's the number one thing we think about and focus on.
That's brilliant.
Sorry,
go ahead.
I was just going to say, in addition to that, we're always, thinking about what might be the next interesting area. Whether that's ESG and changing social perceptions and environmental concerns, and reading that landscape in the marketplace, or whether it's looking at what might be happening offshore and seeing what's gaining popularity over there. That's another thing we could look at. So you're really trying to predict where those areas are. And luckily for us, being a privately owned business, we're very nimble and able to respond to those changing trends very quickly.
Yeah, that must definitely help. I was just going to say that I didn't realize, like, I understood that you probably talk to different areas of the market and do, some research looking at overseas. I'm seeing some interesting kind of trends there too. But I didn't realize how much, influence the retail investor might have here. So if people have ideas and they want to see certain types of ETFs, they directly contact you guys about that.
They absolutely do. And everything gets looked at.
Okay, well, that's a good one to note. And if you're out there, guys, like make sure if you got some good ideas, then please do share them with the guys at BetaShares. You know, the Equity Mates group, and I think you guys have done a couple of shows with them on getting started with ETFs. They had some competitions, and I'm sure there's been other types of these sorts of things. Like if you were to create an ETF with a name and what kinds of holdings it would have. So that's really good. I thought that would just be a competition thing and, you know, not have any consequence, but it could have some direct kind of consequences. So that's really good.
And I think just to add one more thing there, if I could, Mark, you know, once you figure out those areas of demand, I suppose the process doesn't quite stop there. You do need to, and this is really important, right? And investors should take this on board and look at every ETF they consider. That you have to look at, is the exposure true to label, right?
Yes.
So if I can give you a quick example, yeah, at one point we were looking at potentially launching a blockchain ETF. Yeah. And I think it's even floating around, potentially in a PDS somewhere. But you know, when we looked at that exposure and what was in it, the names in there were, you know, off the top of my head, things like Google, Microsoft, ASX, I think even. And you have to sit there and then say to yourself, hang on, is the performance of this blockchain ETF going to be driven by the blockchain outcomes of Microsoft at the moment or Google? No. Is it going to be driven by the ASX's adoption of blockchain? No. There are other factors that are going to swamp that thematic in those, in terms of the exposure, that those companies give to that. And so you wouldn't have had a true to label experience, and to us that's paramount. So you know, we had to, you know, pull the pin on that one, just because we couldn't hand on heart say that, you know, this is going to be driven by blockchain. You know, on the flip side, you can look at something like our robotics and AI exposure, and you know, they're so true to label and pure play in terms of the hurdles that they set for a company to actually be included, that you can have absolute confidence that you're going to get what is on the tin. Right. And I think that's really important, and investors have to look at that. You can't just look at the name. ESG is a classic example.
Yeah.
Every second fund's called ESG now. Go have a look at what some of them are holding. Go under the bonnet. I challenge investors to do it. You'll find a lot of stuff in there that you don't like the look of in most of those exposures. You know, because so it's important to look under the hood. And the very final point is, once you've decided on an exposure, you've got to make sure that it's rigorous, right? You can't have a situation where it doesn't contain liquid underlying components, because we're talking about a market traded investment here. You know, it has to be liquid and rigorous in its index construction.
Those are some very good points there to look at whenever. I think a lot of people get enamored with, oh, it does this, it's a cloud ETF or it's a robotics one, but really look under the hood and make sure that it does what you want it to, or that you believe in as part of your investment thesis, that you're saying that you're invested in this area. Are you really? So very, very good points. I'm sure that that's going to be a part of this that's going to be replayed over and over. Speaking of the things to look forward to, when we talked about, a bit of the future about growth and whatnot, and the ways that you guys look at ETFs and potential for new ones, what do you see as some of the next trends in the ETF markets globally or here in Australia? Not saying that you have to be tied to this, that we're all of a sudden expecting BetaShares to be producing these types of ETFs, but just doesn't have to be types, but just even trends in general. Is there anything you want to add on that note?
Look, I'm going to express an opinion here, and so it's my opinion, not BetaShares, but
absolutely.
We're already seeing the growth of ESG and ethical investing, right? It's you hear about it every day. In my opinion, we are at the tip of the iceberg there. In fact, I would not be surprised if in 10 years' time, ethical investing is the absolute norm and where the majority of assets go, and non-ethical exposures start dwindling in popularity. So I truly expect that to be a mega trend of the next decade or two, particularly as we push towards Paris 2050. And so I have to pick that, in my opinion, as the number one investment trend over the next few years, even though it has already begun. Number two, I think you're going to see a strong rise in thematic investing. Whether it's to just pick some out of the air, cybersecurity or cloud computing or Asian technology, those sorts of robotics, AI, those sorts of thematic-based investments are growing hugely in popularity. And I think we'll continue to provide, ETFs are a great way for investors to access those thematics in a diversified, low-cost way. And I think that will grow very, very strongly. And the third one will be an interesting one. I think active ETFs have a strong part to play. I would say the growth of active ETFs has probably been more muted than most participants expected year to date. There are a few exceptions to that, such as HBRD, the hybrids fund, that's well over $1 billion. But by and large, it's been a little slower out of the blocks. But I really think that you will see more and more active managers begin to preference the ETF structure for the liquidity and transparency and simplicity that it offers to investors. And as that occurs, I think, if and when that occurs, I think active ETFs will really start to find their heyday.
That's really interesting on that last point, because I think in the US, just this first half of or just a bit over the first half of the year, they've had more active ETFs being issued than passive ones for the first time. And yeah, it's going to be interesting seeing that kind of thing happen here. We've seen a few closed-ended funds turn to active, and maybe some of the newer launches will just start off as active. But yeah, it's certainly going to make more interesting things for the active versus passive debate. But like you said, both can fit in the portfolio. So those are some really interesting insights. Peter, thank you very, very much for your time. If people are interested in your insights and BetaShares, where's the best place for them to take a look and get in touch?
Look, there's so many options, Mark. I mean, obviously go to the website, www.betashares.com.au. That's the first place to start. From there, most people will often sign up to our newsletter, which is a weekly newsletter. I mean, we're there publishing economic thoughts and insights, looking at where flows are going, doing white papers on new thematics. There's a hell of a lot of information there, how to build a portfolio for a new investor. It really is a great place to start. There's a blog that's got a lot of information. We publish a lot on social media, and of course, we're in the general press on a regular basis too, providing insights to investors. So, we love hearing from the market and what they're looking for and what they want, and we encourage them all to get in touch.
Perfect. Well, hopefully from this talk, it'll have sparked some ideas for some new things to be sent across to you guys. So hopefully that can complete the circle there. But look, Peter, thanks very much for your time. We really appreciate your time and your views on this. And we hope everyone finds it really valuable. Thank you.
Thank you, Mark, for your time and for organising everything. And most importantly, thanks to the listeners for the time that they've given up as well.
Perfect. All right. Take care.
Yes.
Well, that was fantastic. And we thank Peter again for coming onto the show and sharing all of those insights, from seeing where the market has been and how he got started, to even some of the mega trends that are likely to come out over here in Australia and also globally. If you're interested in more of these kinds of interviews, make sure to tune in each Wednesday as we have another ETF market expert, and we'll ask them all sorts of questions. And even if you've got some things that you want to see, make sure to reach out to us and we can even add those in. So I'm Mark. This is the ETF Tracker Show. Make sure to like, share, and subscribe. See you later.